to this week's Money Metals podcast, helping gold and silver investors during these turbulent times. Now, this week's market wrap with commentary and analysis from Money Metals Exchange, the company named Best Overall Precious Metals Dealer by Investopedia.
Welcome to this week's Market Wrap podcast. I'm Mike Leeson. Coming up, don't miss an exclusive interview with Peter KRAUTH, author of the book, The Great Silver Bull. Money Metals' Mike Maharrey talks to Peter about a range of topics, including the disconnect we're seeing between the gold price and the silver price, and what it's going to take for the white metal to finally catch up to the yellow metal in terms of percentage gains. And despite the big pullback here the last couple of days, Peter weighs in on the longer-term outlook for silver and where it may be headed once it finally does catch a bid. So be sure to stick around for another wonderful interview with Peter KRAUTH coming up after this week's market update. News of an expanding global trade war has sent all markets into turmoil. Gold is falling, but nowhere near as much as the general stock market. On the other hand, silver is getting absolutely slammed right now, down 15% in the past 2 days. The recent action here is proving to us once again that investing in silver is not necessarily for the faint of heart. At this moment, silver is trading at $29.98 an ounce, down a whopping 12.7% for the week, but even more than that, as we just mentioned, if you look at just the last 2 days. Meanwhile, gold, which is down nearly $100 today alone, is off just 2% since last Friday's close and checks in at $3,034 an ounce as of this Friday late morning recording. The economically sensitive PGMs are off a good bit here as well. Platinum is down 6.2% to trade at $936, while palladium sees a 5.3% decline to come in at $954. Finally, copper is off double digits, down 12.7% on the week, the same decline as silver, to trade at $4.48 a pound. One of the key metrics we track around here is the gold-silver ratio, or the number of ounces of silver needed to buy 1 ounce of gold. This ratio has shot up to over 100 to 1 as of this morning. The last time we saw such a high ratio was in the early days of the COVID panic in 2020. Silver is always more economically sensitive to gold, so weakness in the midst of a market scare or short-term liquidity situation is not surprising. Many may view this as a buying opportunity, especially with premiums on silver coins, bars, and rounds still at multi-year lows, and we're certainly seeing a pickup in transaction volume here at Money Metals. In other news, the People's Bank of China, or PBOC, has been quietly buying absolutely unprecedented amounts of gold as the global financial system is deleveraging. Money Metals analyst Jan Nieuwenhuis has just uncovered both formal and informal sources that indicate the PBOC is currently sitting on more than 5,000 tons of monetary gold located in Beijing. That's more than twice what has been publicly admitted. Since the Ukraine war began, China's central bank has been buying roughly 5 times more gold than what it actually discloses to the International Monetary Fund. So the speed of China's gold accumulation has been accelerating big time. Sadly, legacy media outlets routinely withhold crucial information like this from investors. It could be laziness or something more sinister. But all the media seem to do is parrot the official data on gold purchases released by monetary authorities. But the reality is that the Chinese central bank is actually buying many multiples of what it's officially disclosing, and investors should certainly take note. Combine large purchases by the PBOC and other regional central banks with initiatives to settle trade through non-dollar means, and we should expect the international monetary system to continue shifting toward gold in the years ahead, especially given today's excessive debt levels, geopolitical tensions, and now what may end up being full-blown trade wars. For more on this remarkable situation involving China's secret gold buying, visit moneymetals.com/news. Well, now, without further delay, and for much more on silver, let's get right to our exclusive interview with author and resource sector industry insider, Peter KRAUTH.
Greetings, I'm Mike Maharrey, a reporter and analyst here at Money Metals, and I'm joined today with my good friend Peter KRAUTH. Peter is a former portfolio advisor, a 20-year veteran of the resource market. He has a wide range of expertise in precious metals, mining, energy stocks, and much, much more. He is the publisher of a new newsletter called The Silver Advisor, and then he's also the publisher of the Silver Stock Investor newsletter, and he's the author of an excellent book on silver investing called The Great Silver Bull. Peter, how are you today?
I'm doing well, Mike. It's nice to be here once again with you.
Well, it's always a pleasure to have you. You're an all-around nice guy, and I always love talking to you and hashing out things that are going on in the world of metals. And I want to start off. I'm going to give you a little bit of hard data, and we're going to start talk about gold a little bit. Gold drove from 2,500 to 3,000 in just 210 days. And to put that into a little bit of a historical context, it has taken an average of 1,700 days to reach previous $500 milestones. So if like going from 500 to 1,000, 1,000 to 1,500, well over 1,500 days. How surprised are you by how quickly gold has driven upward and eclipsed that, what was kind of out of reach $3,000 level for a long time?
Well, I'm going to say I'm surprised that I'm not. It's one of these things that, those of us who are sort of in this space have been expecting these kinds of moves for a very long time. And I guess we become a little bit jaded. We know it's coming. We expect it's coming. When it actually comes, we're actually a little bit surprised ourselves.
Yeah.
So I guess that's kind of the best way to say it. I am and I'm not. I absolutely expected this to come, but I guess the speed at which it came, the momentum it came with, does surprise me somewhat, and the staying power it has had so far also has surprised me somewhat.
Yeah.
But, there are all sorts of things going on worldwide that I think are driving a lot of this. So if you look at the landscape, I guess you do get a lot of support for why gold is at these levels and why, this is still relatively early days in this bull market.
Yeah, I agree with you. And also, I think you make a really good point when you mentioned the staying power, because when we hit that $3,000 level, I really expected to see a consolidation and several runs at that 3,000. And I think it took two before it actually stuck, which was kind of surprising. I'm like you. It's like you kind of feel like this is coming, but then when it does, then you have all these self-doubts, right?
Absolutely.
Yeah, it's really been fascinating to watch the trajectory of this. Now, I'm sure that as a guy who's really got your finger on the pulse of the silver market, you get asked this question all the time, because literally almost every day somebody asks me, what's wrong with silver? So, Peter, what's wrong with silver?
Absolutely nothing.
Yeah, that's my answer too.
No, I mean, it is a matter of perspective, I guess. But, mining CEOs were complaining when silver was at $18 or $20, and they're still complaining when it's at $32 and $34. Mm-hmm. Frankly, I think silver is continuing to somewhat do what it always does, which is lag gold. And, we are still at historically elevated levels of the gold silver ratio in the low 90s, like 90, 91 or so. And, that is going to correct at some point. I know everybody hears that all the time, and the question is when. But if you want to be positioned for the outsized gains that it will bring you, stop asking when. Just get positioned, right? Because when it comes, it does come hard and really fast, and so you want to be able to take advantage of it. I think, but to be fair, if we dig a little deeper in terms of why silver is acting like this right now, in terms of why, it may not be keeping up with the kinds of gains gold has had. If I step back for a second, if you look at the ratio, we've been at these elevated levels for some time. So I'm talking about around 90 or so. So if you look back at the last sort of couple of years, it's really not behaving all that differently. Where it is behaving differently is over the last, say, decade or a few decades, when the average of the ratio was much lower, sort of around 55 or 60. But in, I guess, sort of recent times, if you are looking for perhaps reasons why silver has quote unquote underperformed gold, I think some of it has to do with its industrial aspect. And, given the issue with tariffs, given the issue with uncertainty, with high inflation and likely ongoing high inflation, despite central banks cutting rates. I think that that is what the market is sort of pricing in to some extent to the silver price, saying, look, if a big part of it is industrial and things are slowing down and tariffs are creating uncertainty and likely to contribute to some kind of an economic slowdown, then perhaps the demand for silver will come off on the industrial side, and that will dampen the overall demand for it. So I think that certainly is feeding into it. But I think that if that in hindsight ends up being the case, then I think that it's actually giving us once again a bit of an opportunity, because I've looked at the numbers, and I forget what they are specifically, but if you looked at how silver behaved when the Fed started cutting rates, and then when the Fed was in about halfway through its cutting rate cycle, the one stat I do remember was within about, on average, within about a year to 2 years, silver was up hundreds of percent. I mean, seriously, over 300%, I think, if you look at the last couple of large rate cutting cycles.
Right.
So the outlook for silver is actually really looks extremely bullish. And, there's always talk about how it's potentially being manipulated, pressured downwards, and so on. I don't follow the silver futures market a whole lot. I know that it is important, and what I do follow to some extent is the flows of physical silver, and that's been a really big deal since last November,
right?
Because of the threat of tariffs. But and again, the specifics I don't follow, but I do know that silver release rates right now, I can't tell you the exact specific rate, but they are much higher than normal,
right?
And that speaks to serious tightness in the physical silver market.
Yeah.
So there are some interesting pressures around the silver market right now, and despite its price, seemingly capped, so to speak, it's sort of boiling under the surface, I guess is the best way I could explain it.
Yeah, that's a good way to put it. It's interesting to me. I've always kind of felt like that the big gold bull run was going to happen when we really experienced the unwinding of the COVID monetary policy, which really was just an extension of the 2008 monetary policy. We've had nearly 2 decades of artificially low suppressed interest rates, loose money. And it's interesting to me that we've seen this big surge in gold, even without really yet having seen that kind of economic chaos and a situation where the Fed is kind of its hand is forced to push interest rates even lower. And so I think it's interesting in that dynamic that we're actually seeing this bull run absent really significant loosening. We've seen some, obviously, but not to the extent, obviously, what people would like. How do you kind of see the monetary policy part of this playing in?
Well, I agree with what you just said. It is very interesting that gold has been so solid and being able to make and maintain these gains in this kind of environment. And really, despite the fact that, yes, monetary fiscal policy have been very supportive for higher gold, yeah. I think it's very early. And what we're about to see is going to just help sort of skyrocket the gold price. About 10 or 15 years ago, I was talking to a banker and said to him, I think gold was $400, $500, $600 at the time. And I remember saying that, I think it's going to 2,000. And he thought I was crazy. Yeah. And yet we're 50% above that now. And it's looking really solid, So, almost 20 years ago, I was saying, eventually we're going to see gold go through like the $5,000 level.
Mhm.
And in the book, I talk about $5,000. I use it. I use it as a price assumption to look at ratios and different kinds of things to where ultimately silver could go.
Mhm.
And I actually think that 10,000 is a lot more realistic, frankly, in gold. And that's a triple from here almost, which really doesn't sound all that, challenging anymore.
Yeah.
What I do think, and to back to your point from before, is that I think the market is kind of sniffing out that we are due for some kind of a serious economic slowdown. Certainly, the ingredients are there for that right now, and the Fed is, as it has often been, stuck between a rock and a hard place.
Mhm.
And it cannot ignore the deficits. It cannot ignore funding deficits and funding deficits at relatively high interest rates. And it says it doesn't take those kinds of things into consideration. I don't believe it, frankly.
Yeah.
I think when push comes to shove, it will have to. And I think the market is sniffing out that when the Fed continues to cut rates in the face of elevated inflation, that is when I think it will lose the last grain of credibility it might still have, and the market would say, "Okay, that's it, game over." I mean, and then you will see gold jump by perhaps hundreds of dollars in a matter of days or weeks, and then I think that you will certainly start to see silver really catch up in a meaningful way. And to be fair, again, silver, we also know historically it tends to lag gold, and it tends to outperform. In fact, it has always outperformed gold in bull markets.
Yeah.
That comes later.
Right.
What I think is interesting, too, is that if you look at how silver has been acting, let's say in just the last couple of weeks, where it has basically maybe kind of gone sideways while gold has, made new highs, I'm actually wondering if silver is not a little bit ahead of gold in this case. Silver miners looking ahead and saying, maybe things have gotten a little rich and have gotten a little overbought, and gold likes uncertainty. And, we're speaking today on April 2nd when a bunch of these tariffs are supposed to come in, and we may get clarity around what that is. I mean, for who knows, for 24 hours or something, but we may get some clarity, right? And if the market starts to feel like it has more direction on where some of this stuff is heading, maybe that is a bit of a trigger for gold to retreat somewhat, because I do think that it is overbought sort of, on a technical basis. And if we get that, I think silver is maybe a little bit better prepared to weather that a little bit. I do think it would come off along with gold, but both will hand us, I think, what will be very attractive opportunities to buy in or to add.
Yeah, I think you're absolutely right about that. Regime uncertainty, I think, is a huge factor right now, just in all of the markets, stocks, bonds, precious metals, commodities, no matter what. And maybe we will get some clarity. I will say this, though. I think that the modus operandi for Trump is uncertainty.
Absolutely.
and I honestly, I think that has a lot to do with that. He is primarily driven by pragmatism. I don't really think he's definitely not like a principled politician. He's not a Ron Paul, or a Bernie Sanders. He's
right.
He's very pragmatic, and so he's apt to flip and flop and shift and negotiate and bargain, which works great in the business world, but markets do not like that at all.
That's
so
right.
I think you're absolutely right. I think a lot of people are looking for that clarity. Do you have any sense in terms of silver? Once we, let's say we do get the tariffs. Let's say it gets kind of put in stone. We understand what they are. How do you think that is going to affect the silver market? I would think it would have more impact on silver than gold, given the industrial importance of silver. Have you given that any thought?
Sure. So, I mean, and that's part of a little bit of my sort of working narrative that I explained a little bit just now, is that because of its industrial component, and that has become gradually more important in terms of the demand side of silver over the last decade or so. I do think that silver is a little bit at risk for somewhat of a correction. We're talking at this point, maybe to the tune of 10-15% on the metals price. But if you think back on in terms of what I was saying earlier, in terms of the outlook, there's always the monetary side, and I think that people do discount that for silver. And I like to say that it's the industrial component that provides a rising floor under the silver price, but a stable one. And then it's the investment demand on that side that will come in. It ebbs and flows. It comes in a big way. Sometimes it moves back out and it comes back in. And when it comes in a big way, I mean, it can be overwhelming. And what I find really something interesting to consider is that if you look back 10 years ago, here's how I split up the silver demand market. It has been traditionally about 50-50 industrial and 50 investment. And when I say investment, I include, physical coins and bars. I include jewelry, and I include silverware. So for me, that makes up the 50%, and a lot of it's for simplicity's sake.
Sure.
So if in fact, in the last 10 years, a lot of that, the reason for that is solar. You've got EVs to some extent and so on, but the industrial demand has actually moved from about 50% to closer to 60% now. So that leaves 40% for investment. So my argument is when investment demand does come back in a big way, there's now less silver available to meet that demand. So what happens when you get the same or more demand as you've had in the past coming in a big wave, and there's less supply available for it? Well, the same buying is just going to push it up even harder and faster and higher. And so I think we are in for volatility and some considerable upside volatility in the silver price because of that. Yeah. And, and back to my sort of, economic narrative, if you go forward and you get this situation where you've got central banks and the Fed cutting rates in the face of sustained high inflation, and the market saying, okay, that's it, game over. I think that, who knows, gold may be 3,500, maybe 4,000, whatever, but still fairly higher potentially than it is right now. And investors really starting to pay a lot more attention to gold and saying, wow, 1 ounce of gold, $3,500, that's a little rich. What other options do I have? And then, who knows, silver might be $35, $40, $45 at that point. And relatively, the amount of silver you're getting for your money is a lot more content-wise. Right. So I certainly could see a little bit of that shift, and people saying, wow, that makes silver a whole lot attractive. And then you get this big wave of investment buying, and then it really pushes the silver price up a lot higher. I think that, later this year, it is very realistic to possibly see somewhere around $40 in silver. And I do think that odds are pretty good for next year to have silver potentially take out its, what is it at that point, 60-year high of $50 at some point in 2026. So, the outlook is bright. Let's put it that way.
Yeah. I think people, and I'd be interested if you agree with this, I think sometimes people underestimate the government support under the industrial demand. And by that, I mean the fact that we have a somewhat of a global consensus that the Trump administration may be an outlier here, but I think broadly speaking, there's a lot of support for green energy, clean energy, solar. There's a lot of government subsidies involved in that. I don't think that's going anywhere. I don't see all of a sudden government saying, oh, well, we don't care about climate change anymore. Obviously, there would be some impact from a recession, but I really do think that the government kind of supports that some of that industrial demand. Do you agree with that?
I completely agree. In fact, I think that that was what we saw coming out of the financial crisis, that the stimulus was very much green and infrastructure
Hmm.
oriented. I think that that was an easy sell for governments because
Yeah, always is.
right? It always is
Yeah,
because people don't push back much, saying, infrastructure, green energy, it's the right way, so to speak, and infrastructure everyone benefits from. So at least everyone's thinking, well, my roads are going to improve, my airports, my rail tracks, all that stuff is going to improve, my power generation, all that stuff gets better. Two interesting things I'd like to point out. One is that just yesterday, I came across a chart showing that in the US, for the first time in 2024, renewable energy surpassed coal for
oh wow.
electricity. Yeah, so that was very interesting to see, and the trend is up for that would include wind and solar. Wind, solar is going to be the bulk of it.
Hmm.
That's trending upwards. Very supportive for silver, absolutely. With silver being so important to solar and new generations in solar technology, actually requiring up to 50% more
Right.
silver per panel. So that's something to keep in mind. The other thing is we talked about stimulus and green and so on, and governments. Now, I mean, this is something I think that a lot of us are missing in North America, at least, is that Europe is looking for, in my view, to some extent, excuses to spend on rearming and also looking for ways to spend even more on green economy, green environment, and so on.
Hmm.
And so you've got Germany, for example, and this is from arguably a right-leaning new leader who's saying, we want to bring in something like a $900 billion package to spend on rearming and to spend on supporting green energy. Part of that is to appease, the grouping they have to make in government because
Right.
they can't form a government alone.
Hmm.
So and in fact they're they're passing constitutional amendments to allow increases in defense and infrastructure, and even foreign aid that through increased borrowing that was not allowed in the past.
Hmm.
So to think that they're willing and able to change or at least proposing to change their constitution to allow all this new spending. So this new spending is bullish for silver in a couple of ways. One, the green energy side is certainly for solar, EVs, EV chargers, to some extent wind, nuclear, and so on. So you've got that. And then the rearming. So, unfortunately, the silver market is notoriously lacking in information in terms of the demand for silver in military applications.
Yeah.
But we do know it's there. We do know that it's significant. And so, if you've got this huge rearming, program for Germany and for Europe, then the demand for silver, the demand for metals, is just going to continue going through the roof.
Yeah.
And to some extent, to their credit, I know this is true in Canada. It's true in the U.S. We're hearing about it a lot in Australia and in Europe, Western Europe at least, that governments there are looking to streamline mining and infrastructure projects.
Hmm.
In Canada, for example, the hopeful new we're having an election soon, and the hopeful new prime minister is saying that he would eliminate. So we've got project approval for mining on the federal level and on the provincial level, which is like the state level in the
Right.
U.S. And he's basically saying, well, you know what? If we've got a robust system to evaluate and to permit projects on the provincial level, we can eliminate the federal level.
Oh wow.
So that's probably going to cut a matter of years
Yeah.
off of permitting for projects. And you've got, as I say, similar things happening in Australia, similar things in Western Europe. So that will again help push all of this production of metals to help feed, the demand. Part of it is also, I think, driven by a new world order that is becoming polarized, right? We don't feel like we're comfortable depending on suppliers and clients, people who will buy from us as readily as we were in sort of the more globalized world.
Right.
So that's, I think, driving a lot of these new policies as well.
Yeah, kind of that. You hear the term bipolar coming up a lot.
Absolutely,
which could infer, I guess, insanity. But I think what they really mean is multiple economic centers.
Sure.
I'm going to get you out on this one. I don't know how big of a technical and analyst kind of guy you are, but it is interesting to look at kind of the cup and handle formation that we've had in the silver market going all the way back to 1980. So you've got these $250 highs, which form the tops of the cups, and then you've got a handle that's kind of been going since about 2011. Do you put much stock in this kind of technical thing? Because this would signal historically in technical analysis a huge breakout in the making.
Absolutely. And yes, I do put a fair bit of weight to it just because I know that, I'm not going to quote, but I guess I'll sort of paraphrase or Jim Rogers here, because he said too, he himself, didn't consider himself to be a technical analyst, but he said, and I very much agree with his point that there are many technical followers out there. And for that reason alone, breakouts can and will be meaningful. And so, yes, I do think this will help create momentum. And so I actually, a friend and colleague, Jordan Roy Byrne, who writes, I'm going to give a shout out to him. He writes a newsletter called The Daily Gold, does fantastic technical analysis. And I often refer to his work. And Jordan has said that, the silver, I think along perhaps with commodities, in sort of modern history, are once at least silver breaks out of the $50 level, this will be one of the, if not the, one of the single most significant technical breakouts of all time. Yeah. So, and he said, the $35 to $37 range, which we're very close to right now, once you get a breakout from that range, then very, very meaningful. And then once you get a breakout of $50, that is, absolutely, completely uncharted waters, all new. You could get huge moves subsequent to that, perhaps to $70, $80, $100 within a matter of weeks, months after that. So yes, I do attribute a lot of value to that because, as I say, many people follow it, and I think that it'll get a lot of headlines at that point, and it'll attract a lot of eyeballs and a lot of buying.
Yeah, and I think you're right. I think that $35 level is kind of the first big hurdle. We've seen it kind of bump up on that a few times, and it's retreated. But I think once we hit that, then it's going to be, or could be, a short trip to 50. And then, as you say, then all bets are off. I actually had Jordan on the show a few weeks back, and he is fantastic. Yeah, he's got a really good very long range lens that he looks at things through. So, well, I'm going to let you go. I'm sure you've got plenty of things to do today, but before we have you sign off, I would like for you to let folks know where they can find your newsletters and follow your work.
Thanks, Mike. So yes, my main newsletter is Silver Stock Investor. You can go to silverstockinvestor.com. That's a paid letter. I also have a recently launched at the beginning of this year a free newsletter called Silver Advisor, and this is companies that perhaps maybe a little bit larger, a little bit more advanced, slightly lower risk companies that you can follow there, as I say, for free. Just go to thegoldadvisor.com/registration, and you'll be able to sign up for that newsletter there. And then, you can follow, you can read my book, which we've talked about before, yes, The Great Silver Bull, which gives you, I think, a good overview of the opportunity in silver. And, it's a good introduction, I think, for people to the whole silver space. Other than that, I'm pretty active on Twitter at, or now X, at Peter_Krauth, KRAUTH, and I'm also on LinkedIn, Peter Krauth. So these are different ways to follow me, and certainly look forward to interacting with your audience.
Yeah, I'm glad you mentioned the book, because people need to get that book. I tell people all the time, if they want a good overview of the silver market, your book is fantastic. And it's the thing that I like, I say this every time I have you on the show, but the thing I love about it is that the way you've put it into digestible nuggets. You don't have to wade through 40 pages of technical analysis to get the point. You can go through the various bullet points. It's so well done. And I really appreciate that book. So,
Thanks, Mike.
Thank you so much for taking time to be on the show. I'm sure we'll have you on again here in the near future as things continue to develop. But I always appreciate your insights and your ability to communicate those insights in an understandable way. So thank you so much.
Thank you, Michael. It was a pleasure. Looking forward to it.
Well, I hope you enjoyed that interview, and that will do it for this week. Be sure to check back next Friday for next weekly Market Wrap podcast. And don't forget to tune in to the Money Metals Midweek Memo, hosted by Mike Maharrey as well. To listen to any of our audio programs, just go to moneymetals.com/podcasts or find them on whatever podcast platform you prefer. Until next time, this has been Mike Leeson with Money Metals Exchange. Thanks for listening, and have a wonderful weekend, everybody.
Thank you for joining us for this week's Money Metals podcast. Be sure to come back next week. And don't forget to subscribe to our podcast through iTunes. For answers to all of your questions, or to discreetly and securely buy or sell gold or silver coins, bars, and rounds, call 1-800-800-1865 or visit www.moneymetals.com. Our knowledgeable and no-pressure specialists are standing by to answer your call during business hours, Monday through Saturday. Or you can lock in your order online, 24 hours a day, 7 days a week. Again, visit us at www.moneymetals.com or call 1-800-800-1865.